Hi, everybody, and welcome to another LSA webinar. Today's webinar is about the future of the small business market, what we're calling a new era, small businesses and the cloud shift. I'm Greg Sterling, and I'm joined today by Charles Laughlin and Neil Polachek, who are analysts working on the Tech Adoption Index program that we launched this year, and maybe Charlie will say a little bit about that in a minute or two. You guys are, we're going to be presenting a lot of material which is semi-controversial, hopefully interesting, and you'll have the chance to ask questions and debate with us at the end. You can submit your questions at any time, and this webinar will be available for rebroadcast within about 24 hours after it's concluded. So the theme, obviously, is the cloud here, and not the infinite wisdom that we're bestowing upon you today, but the notion is that things have come together in such a way that we now can say that the cloud is the new small business operating system, and we'll go into what that means as a practical matter in a little bit. But first, I want to turn it back over to Charlie to tell you about an event that we've got coming up in San Francisco in December, which is going to go into a lot more detail on these topics that we're discussing today.
Thanks, Greg, and hello, everyone, and thanks for joining us on the webinar today, and hello, Neil. Hi, I want to tell you a little bit about the event we're doing in December. It's December 7th in San Francisco at Here Collective, which is a nice event space in San Francisco, and it's called the SMB Cloud Adoption Summit. And what we're really going to be talking about is sort of defining this SMB cloud space, you know, and also defining the pace and nature of SMB adoption of cloud tools for everything from sort of the front office customer acquisition piece, marketing and advertising, CRM, et cetera, through to CRM, and then through to the back office, things like, you know, handling payroll, payments, point of sale, accounting, and so on. So it's really the full operating system for the small business, and it's driven by some imperatives that we're going to define further into this presentation. But at the show, this gives you a quick view of some of the folks we've lined up to speak. And actually, there's a few others that we've since added that I want to mention. We just added Chris Barton, who's the Chief Product Officer for Reach Local, and we've added Jeff Perry from DocuSign, as well as App Direct will be present at the show, and we have a few others that we'll be announcing soon. And that, yeah, so we're going to get into a number of topics that are really sort of central to defining the space and also understanding the friction points to you know, that are stand in the way of success, like customer acquisition. How do you scale up these SMB SaaS businesses? You know, what's the best go-to-market approach? Is it a you know, an all-in-one solution, or is it a collection of point solutions? You know, we'll talk about the investment environment. We're working with SurePath Capital to produce this event. So Mark McLeod, who's the founder of SurePath and the former CFO of FreshBooks, will give an investor perspective, and we'll also have a showcase of really interesting early-stage startups in the SMB SaaS industry. So really action-packed one-day event in San Francisco, which is sort of the epicenter of the SMB cloud. And we really hope you'll all attend. I guess that's enough for now, Greg.
And we've got a discount code at the end, so if you stick around to the end, you get the discount. So the part of the point of this webinar is really to introduce people to our thinking about the whole space, the competitive landscape, and why people should care about this, why this matters, because it matters to really almost everybody who's working with small businesses from a marketing perspective as well as other categories. You know, so what's going on? We've got a bunch of market dynamics that we'll get into that are causing change. Small businesses are increasingly embracing the cloud or SaaS services. You know, the point I just made, what's at stake for the larger market? And then, as Charlie alluded to, there's some go-to-market challenges, some execution challenges, and decisions that need to be made. And what are those and the friction points? And then we'll have some Q&A. So, you know, I mean, one way of sort of approaching this material is like, you know, isn't really this just an incremental change? Or SaaS businesses have been around for forever. what's the big deal now? Why are we in a new era? So we obviously believe that we're in a new era, and what is that about? Well, it's about demographic shifts, meeting rising consumer expectations, and when I say demographic, I'm talking about business owners and entrepreneurs. It's about competitive pressures that businesses face, both the providers of services and the small business customers themselves. It's about the small businesses' desire to simplify their business and their operation, reduce costs. And it's about a lot of these enterprise capabilities moving down market. So, Neil, maybe you want to speak to this slide since you've been talking about this for a while.
Yeah, so I discovered this. Thanks, Greg, and thanks, Charles. I discovered this data point maybe a month and a half ago as I was preparing a presentation. And I think what's most important is that, you know, this is a 19-year trend of 10,000 people. This is just in the U.S. turning 65 every day. Now, that doesn't mean that these business owners will absolutely exit their business, but we are in a process of a really fundamental demographic shift from a generation of business owners that sort of came out of the baby boom period to, you know, somebody's got to take these businesses over at some point. And it's invariably going to be millennials and Generation Z and what have you, or whatever the latest terms are. But it's a very profound shift. And as Greg has this slide up here, there's also a simultaneous shift in the millennials dominating the workforce. Now, that doesn't mean they're all going to be business owners, but, you know, we're really in, you know, this whole shift demographically means that we are in it is the millennial generation coming up, and from an owner perspective, from a business owner perspective, from a consumer perspective, it's you know, the way people used to do business is done pretty much. And so we're going to see a 10-year, 15-year process where these businesses adjust to this changing marketplace, and those businesses have to adjust how they do business in that changing marketplace.
One way to look at this, Neil, is if you think about if someone were a younger person were to start a business fresh today, what would be their tool set versus a business that was started 15, 20 years ago? It's a pretty dramatically different composition.
Well, and that I totally agree. And if you think about that 20 years ago, the first thing you probably did was you went to the phone company and got a landline for your business, right? And that's how, you know, everybody figured out that Charles Laughlin just opened a guitar studio in Chicago and was giving lessons and selling guitars. That same person today is going to start their business. Well, they already have a phone. They don't need a landline, right? That phone is potentially packed with virtually everything they could need to run that business except for the physical location. So, you know, a very fundamental shift in the way, you know, commerce is going to happen. And let's not forget that, you know, enterprises, yes, enterprises influence lots of things in our lives. But, you know, if you look at the numbers, small businesses represent 98% of all businesses on the globe. So, Charles, you want to talk about this slide?
Yeah. So what we're looking at right here is essentially it's from our Tech Adoption Index survey, which we ran earlier this year. And we're getting ready to field a second wave of that survey shortly, and we'll have some data to share at the conference I mentioned earlier. But anyway, what this shows you is sort of what's the composition of a business that indexes higher for tech adoption, specifically cloud tools adoption. And so 72% of them are less than 10 years old. In other words, the business has been in business for less than 10 years. They tend to be, you know, small businesses, but not micro businesses, 10 plus employees. And the bottom 2 points, or the idea of allocating more digital. It's like if your business is spending more than a quarter of its budget on digital advertising and marketing, that correlates to a higher rate of tech adoption. Also, the complexity of your media portfolio also indexes to a higher tech adoption. So a business that maybe just uses Valpak, or not to pick on them, or some sort of analog form of media, and they rely on one or two sort of traditional sources for leads, versus a business that has presence management and social media and a website and a search marketing program to drive traffic to that website, and so on and so on. Those things, those sort of set the adopter from the non-adopter apart. And also, we're seeing that overall, and particularly higher for this younger, for the tech adopters, that CRM is a sort of a focal point for entry into the cloud. So we sort of developed a profile of who's most likely to adopt cloud tools for their business.
So one of the factors here, beyond the age of the business and the age of the entrepreneur, is the pressure that consumers are putting on small businesses, or the expectations that they bring to small businesses. We were talking earlier this morning about how a lot of the enterprise services, a lot of the big brands are conditioning consumers to expect a certain kind of user experience, and that gets projected onto the small business customer. Why can't I pay with my phone? Why don't you have online ordering? Why do I have to pick up the phone and call you and I can't just message you, etc. So this is from a Microsoft piece of research that shows that consumers have high expectations of small businesses. This is specifically about small businesses, and they want more technology. So that's playing into this. It's not, for everybody, it's not the driving factor, but it's a piece of this. Another really
Let me jump in here.
Okay, go ahead.
I was going to jump in and say that these expectations are really about not just the expectations, but they manifest themselves in the customer experience. And, Greg and I have had some debates offline about, I think customer experience will be the differentiator going forward among all businesses, because in my view, many things we buy today are being reduced to a commodity level. And that the only way to distinguish my commodity versus Greg's commodity that we're selling is the customer experience, the customer wrap that we put around that. And that is really what all businesses, large and small, will have to figure out, how to deliver these compelling customer experiences. And what Greg has on the slide here is really just part and parcel of that customer experience expectation.
And I think we can have a long debate about what is the customer experience. How far does it stretch in terms of initial contact, post-purchase, digital assets, customer service over the phone, in-store,
the entire
stuff. That's a whole long discussion otherwise. But another factor here, this is very interesting. I think this is from an Intuit survey, and this is one of the driving factors behind small business cloud services adoption, is that most of these businesses are spending only a portion of their time, a little more than a third of their time, on doing their actual service or whatever their product is. They're doing other stuff. They're doing marketing. They're doing sales. They're doing invoicing. They're dealing with internal employee management, payroll, all these tasks that they're doing that take up time and don't allow them to focus on the thing that they really got into the business to do. You guys want to add anything to that?
Well, I think I'll just add, not to jump ahead of what we'll share later, but we did, this was pretty much validated in our survey data, this point, in the sense that efficiency and seem to be the biggest driver of cloud adoption. The desire for efficiency was, not the only driver, but certainly it ranked high among the drivers for cloud adoption. So it's sort of validates, or the Intuit data validates, is consistent with the data from our own survey.
So we've sort of boiled down kind of key functions in an organization, whether it's a large organization or small, but in this case, small organizations, into these categories, which can be defined in various ways, but they sort of functionally boil down to these kinds of things. And as Charlie alluded to a second ago, the cloud makes a lot of promises sales promises, marketing promises to would-be customers around simplicity, efficiency, cost effectiveness, software is always up to date, no need for patches and so on and so forth, security, and then sort of omni-channel accessibility, right? You can get it from your PC, you can get it from your phone, and so on. And an example of that is Xero, which is a payroll and accounting software, cloud-based software platform. And this was really, I could have plucked any number of examples, but this was just one that was immediately available. And it may be a little challenging to read. Go ahead.
Well, I think go back one slide there, Greg, because even this shows that, the next one around Xero, what that shows just in the way you've portrayed it there is that the line between accounting and human resources and payroll is blurred, right? There used to be, ADT did payroll, and I did accounting on QuickBooks, whatever. All these things, the boundaries are really eroding because these cloud solutions can be integrated. They can be, APIs can allow them to talk back and forth. So it's really changing the competitive landscape. And I think your slide there just...
Yeah, that's an excellent point, Neil. Thank you for bringing it up. Is that the definition of the product and what it can do is evolving, and so you do see these combined capabilities. And this may be a little bit challenging to see for some people, but it's a sort of a laundry list of all these capabilities: process invoices, convert your data from QuickBooks, send purchase orders, manage inventory, integrate with other tools, manage billing, pay your employees. So there's a lot of functionality that busts through some of these categories, as Neil says.
All the quadrants pretty much are close to it, and just take a look at the pitch, right? I mean, the pitch is really interesting. Features that will change your life really goes to a kind of emotional pitch that some of these companies are making. Give yourself more time, simplify your life, make it easier. That's all part of this, which is interesting as well. Charlie, go ahead. Well, they seem to be driving off the same insight from the Intuit data, which is that, our mission is to give you back some of your day to spend doing what you're passionate about and to make your life less, you pull your hair out less, do what you love more. And I think that is the appeal of many of these services. The execution of that is always debatable, and we get into some questions about whether there's they get overwhelmed with it, so many different apps, and whether they all live up to their billing. But that is certainly the appeal. In large
There's
measure.
some important words too in the bottom of their pitch there: secure, reliable, 24/7 support. I think
customer experience.
Well, customer experience and also security. I think security is going to be a big issue going forward.
Right.
Absolutely. Right. Exactly. So
there's a trust factor in putting everything into the cloud, all your data, and
that's right,
all your customer information,
which at once makes it more vulnerable and more secure, depending upon who you're dealing with. Right.
Mm-hmm.
So this slide is from our survey, and it just echoes the earlier slide about what the promises of the cloud are. And so what we see here in the human resources context, because we drill into these different categories, and there's some vertical segmentation as well, is that the chief motivation is that it's saving time, making the organization more efficient, and it's easier to use. These are people who've adopted cloud-based solutions for human resources and payroll. So that validates the earlier slide, and very much in tune with the marketing messages that we're seeing from these companies. One of the things we looked at also, and you guys can chime in on this is, where has cloud services adoption among small businesses already occurred?
Right, and we're just seeing there's adoption across the board, across all of the areas that we're looking at. Obviously, supply chains hasn't developed as much as some of the other areas, but and we're certainly seeing payroll as sort of the initial area where a lot of adoption took place, and I think it sort of makes sense. There's a lot of disruptive solutions out there. Payroll is a top of mind function for any small business, so I think that there's been some disruption there already. Stands to reason, but I think we'll see what the sort of going forward view is, and it shifts a bit.
Well, and I'd also say, Charles, on the payroll stuff, most small businesses, if you have employees, you're going to probably hire an outside payroll service because the risk of not doing it right is too high. So some of this adoption, I'm sure, is a translation of ADP to the cloud or paychecks to the cloud or what have you. So it's not all, folks going from old world ADP to new world Gusto. I'm sure it's some going from old world ADP to cloud ADP. So,
right, and that's where this gets a little fuzzy. It's not all disruption. Some of it's just shifting the mode of use of the service. But there's some disruption in there because there's a lot of disruptive players in that particular area. But
so we've got a segment of the audience, a segment of the survey population who has not already adopted some service but is intending to, and this is a reflection of that. Where is the intention? And CRM was the number one category here.
Right.
And then the question, go ahead, Charlie.
No, it's fine. We'll talk more about
then the
CRM.
question is, yeah, we'll definitely talk more about CRM. Then the question was, when? What is the time frame for adoption? And among the group that intends to adopt, the cloud intenders, as I've called them here, it's within a year. So it's a big chunk within 6 months, and then the next group within 6 to 12 months. Whether that translates into actual behavior is another matter, but it indicates a pretty near-term time frame for people.
I think that's pretty significant. Of course, they don't all follow through on what they say, but always a significant number do. And in my experience, from having done other surveys like this with small businesses, there's always some lag there, but that intention is pretty clear that this is a near-term issue.
Right, and so this is just an indication of some of the companies that people are working with. We have a very, very long list, and it's ranked by penetration, and this is just the top 10. So you can see an array of companies, representing different kinds of functions: marketing, productivity, point of sale, accounting, and so on.
Productivity seems to be the gateway drug for cloud adoption. Having your documents and your your basic information in the cloud, I think, sort of conditions the market for further cloud adoption. At least you could perhaps argue that.
Right, and Google's not on here, surprisingly, but they're definitely in that category for sure. And so a kind of a little case study that represents the larger marketplace and the phenomenon that we're describing. So Square, as everybody on this call knows, started out as a kind of a dongle that you plugged into your smartphone and allowed people who otherwise wouldn't have merchant accounts or be able to take credit cards to take credit cards very quickly and simply. Online sign-up process, get the dongle, plug it in, register, and you're done. And now what they've become is really a broad platform. And people are probably aware of some of this, but maybe not all of this. So as you know, they have in-store registers, but they are also doing payroll, invoicing. They're a bank of sorts. They're doing financing. They offer loans. They're doing marketing, social media marketing, email marketing, CRM, and they have the benefit of a closed-loop kind of capability because they can show how many marketing messages drove actual transactions because they can control that point of sale, booking and scheduling, and then they have a whole app marketplace which is integrated with third-party tools and services that they've qualified. So this is a company that started in a very sort of small place and has expanded out dramatically, which has all kinds of competitive implications for the larger market.
Right, and I think this is the pattern we're going to see more often than not. once you have a customer relationship, the natural inclination is to find new services to layer onto that, and so they've moved out from logical into logical adjacencies around that starts with point of sale, and I think we'll see others are doing that, and we'll see more of that, and that's, again, to your point, raises a lot of questions about who your competitors are today versus next year and 5 years from now.
And it goes to the boundary busting point that Neil made just a little while ago. So why does it matter? We have two kind of high level stats that appear to answer that question, but there's a more complicated story. So the first one is our survey revealed, and other surveys have shown similar things, that if you had to work with multiple partners versus a single partner, would you rather work with a single partner? Most people said yes. And then this is more provocative. So if you have a media publisher or company, sort of a legacy provider of marketing services, versus one of these cloud technology vendors, a Square or somebody in a comparable position, would you prefer to work with them, or would you work with the current company that you're working with? And 62% said they would choose, at least in the abstract, these cloud technology companies over media companies. Now, Neil, you had a more kind of complicated view of this.
Well, I think we did tech versus media. I think the real question is, and I think we'll do it in the next wave, is the accounting people versus the human resources versus the supply chain versus the media folks versus, I think within all these, let's call them operating areas, I think what we're going to try and uncover from the next wave of research is who has the best chance of delivering this sort of bundled solution that goes beyond their core competency today.
Yeah, I think this tells us a couple things, and there's more information we can gather from a different set of questions going forward. But I think one of the things we're trying to get at is, companies, given the local search association's constituency is companies coming from the, deploying a sales force to sell largely media products designed around lead generation. Is there a brand, is the brand already conditioned to move into new areas like software, or is there a brand challenge? And so sort of it leads to questions about how you go to market when you make a pivot as dramatic as, moving from selling lead gen products to selling platforms and software as a service. So I think, it doesn't answer the question fully, but it gives some insight into how small businesses perceive it.
And what we see in the survey data is that when people do adopt these cloud services, very often a legacy or an incumbent provider, in this case, sort of in these other business categories, is replaced, is substituted for, or displaced by the SaaS company. And this is just an example in the I think in the payroll,
this is payroll.
Human resources context. Yeah. So there's a risk there, And
there's this disrupted risk, and there are some potentially disrupted companies that are setting up their own cloud services. So to Neil's point earlier, there's sometimes it's shifting from an old version of the same company to a new version, but clearly,
and that's Office 365, right? I mean, that's right. Microsoft. That's Microsoft moving from downloadable software to a cloud-based version. So this also raises a question which we won't answer today about how do you play defense? If you're one of these companies that has the relationship today and is being threatened, what do you do about that? Build, buy, partner, and maybe, Neil, why don't you take this one?
Sure. So this is what I was talking about a little bit earlier. I put these buckets together a while ago. I think we were on the, hold on a second.
So the idea of this slide is that these categories, which had formerly been really brightly divided. People didn't get into each other's markets. Human resources was very different from supply chain, which was very different from marketing and advertising and finance. Now those boundaries are blurring. Go ahead, Neil.
Well, so I put these together. They focus on the things that SMBs really have to spend their time on, and what we discovered is that CRM is kind of the glue that holds all this together. It's the point of integration for a lot of these solutions out there. So I think a lot of the opportunity and the competitive market dynamics will be around who's going to get to play the role of CRM provider or owner of these for these small businesses, and then these other things start to hang off of it. But what you also discover is, and this was based, I built this slide on sort of market capitalization, is that the market caps in some of these sectors are really quite huge, and that when if you sort of broaden your view, marketing and advertising in terms of market valuation, is a $50 billion more or less kind of sector. You look over at something else like human capital, it's $200 billion. So these are very big markets in terms of market valuation, and that over time these boundaries, as we saw with Xero, where they're both in accounting and in payroll, those boundaries are starting to go away, and will do so more as time moves forward.
Well, and the incumbents, many of whom are public companies, who are being attacked from below by some of these startups, will see their valuations decline unless they respond, and unless they can tell a future forward-looking story to the market, which is another motivation for them.
Mm-hmm.
So let's, Neil, take
and it's why,
Charlie,
and it's why there's a lot of money going into the sector, because it is about disrupting $600 billion of existing market valuation, right? There's a big target on the backs of the likes of Henry Schein, as is in this picture, or Dentrix, which is their own captive CRM practice management platform, and it goes throughout all these other verticals as well. So there's both a niche and vertical dimension to this, as well as I think the next slide, as well as horizontal players in this space. You have the next slide here, Greg? Yeah.
So what it means overall is that there are many more competitors, and the competition is intensifying.
Totally agree. So I think the next slide is around the forecast.
Yep. That's right.
Yes.
So it didn't move for me, but maybe my computer's slow. But on the forecast side, I have started to lay out a forecast, and we used the 7 million core SMBs as the core audience. And then, you can go to lots of places, and people say there are 28 million SMBs in the U.S. People say there are 23 million SMBs in the U.S. We're going to use 20 as really the addressable market. Does that leave 8 off? It may leave 8 off, but those kinds of businesses we don't believe are really ripe for spending, serious money in the cloud. So we've put the addressable market at 20 million. Again, 7 being the core SMB market that the Bureau of Labor Statistics will track, and then an additional 13 million, startups, individuals, folks like that. So total addressable market U.S. is 20 million. And then we built the forecast that's part of this program based on existing penetration and some average monthly SaaS pricing in the 4 or 5 business areas. And what we come out with is about 10 billion in spend today in SaaS by SMBs across their business, about 6.2 coming from those 7 million core businesses, and about 3.8 billion coming from the additional 13 million. So roughly the core 7 million accounts for almost twice as much in spend as that additional 13 million. And that's logical, and we've pressed this around a couple of folks in the industry, and people feel pretty comfortable that this number is a pretty good number to start with. As we get more data from the survey, we'll continue to refine this, and we're hoping to add a global element because, you know, this is not just a U.S. business, and a lot of these cloud businesses can easily cross markets. That's one of the things about cloud, is that it's a language shift. It's beyond that. It's not much more. So there's a lot at stake in this marketplace.
And because every slide presentation has to have a picture of a boat being tossed on the ocean, here's one. So you know, we want to be very sober about the challenges here. I mean, we think that this is a profound development. There's a lot of momentum as the data reveals, but there are also some go-to-market challenges. Any individual company may not succeed. There's a lot of examples. There'll just be a couple of them here where companies have not succeeded, where they've tried things, and so go-to-market and your approach is really matters. But first, the survey also reveals that there's a meaningful component of people, and these may be well-established businesses, that are not adopting the cloud. And here are the reasons that they're not going to shift to these newer solutions. And it's mostly about inertia and comfort with the existing relationship, the existing product.
Yeah, I'd point out a couple things here. Well, first of all, it's important to note that there is, while we noted there's a profile of the company that has shifted, there's also a sort of a profile of the company that hasn't, and that's, again, more established, probably less in growth mode or aggressive growth mode, more in maintenance mode. You know, we don't have age of owner. So that can only be inferred either way by age of business. But they tend to be less, you having a less diverse media portfolio. In other words, they may be advertising one or two media to acquire new customers, and those tend to be more likely to be traditional versus digital media. So that kind of paints a picture of the company less likely to be adopting cloud tools versus one that's more likely to be adopting cloud tools. But I also say that even among those who haven't adopted, lack of awareness doesn't seem to be the issue. So I think people are sort of generally aware. Now, there's always a little vanity perhaps in that answer, but and also lack of prior bad experiences. So it's not that the market has been spoiled by maybe an early entrant that didn't have its act together and gave a lot of bad experiences that made it difficult for those who came in the future. That really hasn't been a factor that we've seen.
So just to reiterate, you know, the single largest reason was just comfort level with existing tools and technology. A couple of quick examples of oh, go ahead, Neil.
I was just going to say, and so as companies bring product to market, you know, how to get people to switch from something they're comfortable with is about simplicity and ease of use. And you see it all the time. People sign up for these things and then they abandon it because the onboarding's not easy, or the startup piece is not quite as easy as it appeared to be, or the, you know, conversion from QuickBooks to Xero is not as easy as it should be. So all those things that, let's call them the human factors of adoption, are going to be really critical in seeing these SMBs shift from what they're comfortable with today to something that conceivably could save them time, could save them money, and all those things. But it's really got to be done in a really, really, really simplified, easy-to-use fashion. And I don't think much there is quite there yet.
This goes to your customer experience point in a slightly different way, right? So there's a lot of companies selling marketing services. A lot of companies selling marketing services to small businesses, search marketing. The ones that have the lowest churn rates, that are doing the best job, are the ones that are very service heavy. They make sure they're very proactive. They make sure their customers are engaged. They make sure that they're delivering, you know, they're answering questions, and that they're very engaged with their customers. There's a lot of hand holding, And so, to the earlier point, if you get somebody to sign up for a free trial, but they don't ever use the product, that's going to be a problem. So there's definitely an engagement and service component there. But just moving on to a couple of, we're getting to the point where we can take some questions from the audience. But these were some top of mind examples of failure. Now, this may not be entirely fair. So Amex, because it predates all of this stuff really. So Amex invested $12 million in a company called Clickable, which is still around. And what they were doing was trying to simplify search marketing for small businesses. And then later they added other kinds of digital media, social media. And Amex was offering it to the market through its open brand. And the idea was you're going to buy search marketing from American Express. And it failed. It didn't work. And there's a more complicated story, but the thesis that I'm sort of operating or advancing here is that you're not going to buy search marketing from a bank. You're not going to buy search marketing from a credit card company. Now, circumstances may be different. This may have been too early for the market. And Neil, you have a contrary example.
There's
today,
the RBC Acquisio is one example.
Yep.
It's a very recent deal where Royal Bank of Canada, working with Acquisio, which is a search marketing platform, to offer search marketing to its small business customers. And we'll find out, I guess, once that's been out there a little while, whether the timing is better now. I suspect it is, but we'll find out if that issue of brand stretch, why am I buying search marketing from a bank, whether that issue can be overcome now more easily than it could have been back in 2010.
And so another more recent example is the Intuit Demandforce example. So Demandforce is one of the poster children for this whole space, CRM tool, very successful in certain verticals. Intuit bought them for over $400 million actually in 2012.
Yeah.
They could not integrate it into their larger product suite, and they wound up spinning it out with some other stuff, including Quicken, I think, in 2016. And, Intuit has a track record of failure here. I mean, if anybody from Intuit is on the call, my apologies, but they have had a number of other acquisitions that have failed as well. And so this just illustrates the risks to companies. On paper, something may look very good, but if you don't do a good job of integrating it, of bringing it, sort of servicing the customers and so on and so forth, it's you're not going to succeed. And there are other examples.
I think,
go ahead.
Greg, even on the Amex Clickable thing, I think, that deal, was it big enough to make a difference to Amex? Probably not. Even if it was successful beyond its wildest dreams, right? I mean, would that not matter to the
material for Amex? Yeah, it's hard.
That's right, immaterial. And that makes some of this very challenging. It wasn't the case. It may have even been in the case that Demandforce was not going to materially affect Intuit's overall, market valuation. But they did spend a lot of money, and they did not execute on that.
So we're coming to the sort of summary slides here. This just reiterates what we've been talking about. The market is really now shifting. It's very dynamic. Who your competitor is tomorrow may be very different from who your competitor was yesterday. These boundaries are kind of falling or blurring. Incumbents across the board are facing displacement and disruption from startups who are aggressively going after their business with cheaper products, simpler products. And startups have their own pressure to build out more features, enter new markets. Their investors want 10x returns, scale, and so on and so forth.
And scale is a big challenge for these SaaS startups. It's sort of a common complaint that, an app, SMB app will come out, it's great, it works really well, it solves a problem for small businesses, but scaling past those first few thousand customers or hundreds or low thousands of customers becomes problematic. That's a very common wall that they hit. And so then they have to look at different channel strategies. And so that's one of the issues we're going to be talking about at the conference. How do you get past that scale hump that they all seem to run into?
Right, and it raises questions about, do you specialize in selected verticals, or do you have a broad focus and try and make it scalable across industries? Do you go to market directly yourself? Do you have a reseller channel, or do you do both? I mean, if you're embracing a reseller strategy, often they won't do a good job reselling your product because it might be part of a portfolio.
One of 1,000 they're reselling, and where it's just not prioritized the way you'd want it to be.
Right. Who do you partner with? And also, to the point about Xero and Square, like what are the coherent additions to your product? What markets do you go into, and what do you shun? I'm always reminded of the Steve Jobs quote about making decisions about what not to do, which I think is very powerful. And then on the incumbent side, whether it's in marketing and advertising services or any of these other services, same question about product scope. How far do you cast your net beyond your legacy product? And in doing that, if you're going to go bold, if you're going to go out into these other areas, do you build something internally? Do you buy something? Do you partner with somebody? And that involves kind of a clear-headed understanding of your own limitations, where you have strengths, where you have weaknesses. But the challenge there is that you aim low, and you get a sort of a cheap product that sort of gives you a capability, but it's not that good, or it's not really good enough to make a difference. And then, as we just talked about, there's always the danger of poor integration and execution, which is arguably the biggest risk here for the larger companies. Yep. All right. And on that note, thank you everybody for
thanks,
tuning
Greg.
in.
Thanks, Charles.
Thanks, Charlie and Neil. And hopefully we'll see you at the event and at the next webinar. Thanks very much, everybody. Have a good afternoon.
Bye. Thank you.